Natural disasters, surging oil prices, inflation fears in Asia. Australia's Reserve Bank is not for changing. Today's release of the minutes of its April board meeting provided more detail of its decision to keep the official rate steady. Simon Palin reports that the RBA will do what it enjoys doing most when it comes to interest rates: nothing.
The short-term economic impacts of the Queensland floods are already being felt. The Reserve Bank has been considering if the flooding will have a longer-lasting effect.
I think the minutes make it fairly clear that it's not. The RBA is going to look through those effects, look through the effect of the Queensland floods.
But the latest Reserve Bank minutes also note that subdued consumer spending was affecting prospects for investment in the retail sector, and that the appreciating dollar is weighing on trade-exposed industries such as tourism and manufacturing. Some economists say the strong dollar is helping to keep interest rates on hold.
I think it's actually a key part of the adjustment mechanism that we have in Australia. In some ways, rather than lifting interest rates, we have the exchange rate appreciating right now and doing some of the work for the RBA.
The minutes acknowledge a pick-up in business investment, particularly from offshore. According to the RBA, the earthquake in Japan could actually provide a boost to Australian exports, particularly LNG.
In the very short term, they expect it to be a temporary disruption, but in the medium term, they expect a pick-up in demand, and in particular, a pick-up in demand for non-nuclear forms of energy.
Concerns over the US economy once again featured prominently in the minutes, particularly a subdued housing market and high oil prices affecting US consumer confidence. And the US has been warned its AAA credit rating is at risk after Standard & Poor's changed its outlook on the US to negative. It puts more pressure on Congress to agree on a plan to reduce the country's burgeoning debt.
Given the gulf between the parties on how to get to that goal, we just think it's going to be an iterative process that's going to extend right through the 2012 elections and afterwards. And right now, it's the gulf between the parties that we think is going to be very difficult to bridge, not only in the next couple of months, but possibly in the next few years.
The White House dismissed the decision to downgrade the outlook for the US, saying all political sides are making progress. But if it is a problem in the US, it's a problem for everyone, and we'll feel it too.
If US growth deteriorates and then has a consequent impact on world growth, then that lessens demand for the Australian commodities, and hence an impact on our dollar. So that's why it's imperative that the US joins other countries that have actually done something about their debt levels.
And the warning from Standard & Poor's led to a broad sell-off on markets around the world.